For a company to be viable, feasible, and investable, you need to go over those 6 criteria. One of the biggest secrets when it comes to investing in startups is how you manage your time. The scary source of the investors is time. At the end of the day, you're going to invest in a very low amount of companies versus all the companies you see. So you need to define what are the companies that are attractive for your investment or not. If you want to invest in startups, there are rules you need to follow. There are criteria that you need to follow. And you can divide it in 3. You need to invest in projects that are feasible, that are viable, and that are investable. They have to be viable, which means they have to have a market, and then you need a robust value proposition, but it has to be feasible. Feasible means you have to have the team that is able to implement, and it needs to be the right moment, but it's not enough. To be investable, that opportunity has to have a dimension of scale, and it has to be exceedable, meaning you have to find a way so that you get your money back. For a company to be viable, feasible, and investable, you need to go over those 6 criteria, and you need to really do your specific analysis. And this is what we're going to do one by one in different videos. And we will start with market. What you're going to hear all the time from business angels and from VCs, it has to be a big market. It makes sense because when you say big market, what you understand is that we will generate enough value to enough potential customers that will be the big company. It's true, but it's not enough. The market has to be accessible. You need to show as an entrepreneur your ability to access that specific market. Why? Because, there are many very big markets, and the cemetery of startups is absolutely full of companies that have been after a very huge market. The key, and specifically in early stage, is to show your ability to access those markets. And how do you do that? Well, you do that understanding the needs of your potential customers, understanding the needs of your early adopters, understanding the needs of your beachhead market. There is this huge market, and if we have this 1% of that market, then still it's very big and we can make money out of it. Yes, all right, but I can do that. You can do that. It takes 10 seconds. What's really differential is the bottom-up approach, where you will be able to explain what is your customer cost acquisition, what is first people you will talk to and everything. So when it comes to market, big is not enough. It has to be accessible, and you need to show to the investors how you will access at a competitive cost this market. As an investor, just focusing on market size will be a huge mistake.